Thank you very much, and lovely to see all of you here in this last panel of the day. It's been a long day, but in the panel before us, we will seek to reflect on the shifts in European and national decision-making capacity and the corresponding support for EU solutions. The repair work from the financial and euro crisis has largely been done, but the crises have left traces or scars across member states. Populist and Europe-skeptical voices have been on the rise. Is the European project no longer delivering? Has it become fearful of itself as well as of the wider world? Established patterns no longer appear as solid. Strong new economic rivals are emerging. Global trade relations with trusted partners have become looser. And even internally, with Brexit, a member state leaving what is the world's largest and richest single market. Clearly, confidence has been rattled. And what can we make of all this? At the same time, through an extraordinary confluence of the end of the terms of mandates, institutional mandates, all occurring in the last 6 months, we see a new European Parliament and President, a new Council President, a new European Commission President and College, almost, and a new President of the ECB, who was confirmed this morning. Can we expect a new elan from these institutional changes? Helping to answer these questions today, we have panelists, and I would like to start with Mr. Pisani-Ferry with the EU at origin, an economic project. Will the European Union keep the control over its own destiny, or will it be destined to react to the broader, wider forces that I alluded to in my opening comments?
Thank you. Let's avoid embarking on too much soul-searching. I mean, we do have an agenda in the EU. I think the declaration by Mrs. von der Leyen before the Parliament was clear. Our political priorities, our policy priorities are clear. So, big missing part in your survey was climate action, which is a sort of overriding policy priority. But let me speak about something else, which is also very important, which is that this world in which the new Commission is taking office is quite different from the world in which the previous Commission worked. The EU has been used since the start to function in a world that was relatively well ordered and in which you could separate economic relationship from geopolitics. So that was very good for the EU because the EU is governed by rules, because the EU separates itself, different type of policies. It's governed in a way in silos. And so you could be a strong player in trade policy, you could be a strong player in competition policy, without having to be concerned, deal with other aspects which are more geopolitical. Now, the world we're in is a world in which neither China nor the US has this type of separation. China is governed not by rule but by party. The US is in principle governed by rules, but reality is not always in accordance with our perception of the strength of rules in this country. And those two countries, they increasingly combine geopolitical consideration and economic consideration. And that's a challenge for the EU. So the question is, what should we do? And we wrote a paper at Bruegel, actually with someone who is now with the IAF, Elena Rybakova, about the challenge of economic sovereignty. So let me say first that how we should perhaps not react. I mean, I don't think we should consider that the policy we have in place, the system we have in place, have to be completely transformed, that, that the rules, we should be overriding the rules because of this situation. And let me take an example. There's been a lot of discussion about competition policy, about whether competition policy still has to be run in the way it's run in the EU. And I think that would be dangerous to say that competition policy, which is one of the strengths of our economy, should be diminished because of geopolitical consideration or security consideration. But what we could do is to have a procedure that makes it possible to take into account security concerns in a competition case. And so we're proposing, for example, that the High Representative, when the Commission has to decide on a competition case, the High Representative could be able to say, to evoke a security dimension and say, okay, on competition grounds, this is a decision we should be taking, but there is a security dimension, and as a High Representative, not as a member state, supporting a particular industry or a particular company, but the High Representative could be able to say, here is a dimension you should be taken into account. Okay, that's one example. Now, let me mention two other dimensions and conclude. One is investment, and that's foreign investment. That's a concern for everyone. That's a concern in the US. We had a new legislation. That's a concern in Europe. We have realized that Chinese investment, to be clear, are not entirely economically motivated. They can be motivated by political consideration and consideration of getting access to technologies through a particular investment. At present, member states are able to take decisions individually, and we have a very soft mechanisms to address the EU dimension. This is not sufficient, because any investment in the EU gives access to the entire internal market. So there is a common dimension here, and this should be revised in order for the member states, to the Council, to be able to take a decision about the risk involved in a particular investment. Last example, the international dimension of the euro, and I'm speaking obviously in between two players in this regard. The euro for 2 decades has been essentially a domestic project. With a doctrine that was neither encouraged nor discouraged the international role of the euro. This is maybe the time we have to reconsider, because we've seen that the US dollar is a sort of public good, but a public good that's used in the geopolitical interest of the US. The Iran case is very clear in this regard. Even though, obviously, the monetary dimension was by far not the only dimension, but it's one of the dimensions. So this is something we may have to reconsider, and reconsider means essentially one thing. In the crisis, the US Federal Reserve was able to extend swap lines to a number of central banks that made these central banks able to provide liquidity in dollars to their bank in a situation where they could not have access to Fed liquidity. That's a clear dimension of the international role of a currency. That's perhaps something we also have to reconsider, whether the ECB should be able to do that. So I think, to conclude, that in this new environment, we should not overhaul the way in which we manage our policies, but there are a number of adjustments that have to be considered.
Thank you. Looking at this, and I turn to you, Mr. Cunliffe, from a financial stability point of view, I've recently come across an article from yourself where you argued for a long time economics drove politics, but of late it seems to be that politics is driving the economics. And do you see risks for that in the financial stability?
Okay, so the first thing I'd say, it's the economics doesn't always drive the politics, but coming out of the financial crisis with the recession that we had and then the repair of the financial sector, world leaders were uniquely focused on the smallest details of the financial system. I can remember seeing European leaders having an animated discussion over the rules for transferring assets from the trading book to the banking book at the end of 2008. And it wasn't a crazy discussion because the future of a number of major banks depended on being able to do that. One wouldn't want world leaders to be focusing on accounting rules forever. And clearly, as we moved away from the financial crisis, their focus moved on. But the politics that's emerged, particularly in the last few years, and some would argue may have emerged because of the financial crisis, or certainly amplified by it, has now turned around, and I think it's very much driving the economics. So you see an example, quite a clear example of it in the UK around Brexit. I mean, whatever you think of the Brexit process, it's clear that investment in the UK started falling back pretty markedly at the end of 2017. We had negative investment growth of 2.5% in 2018. It recovered a little bit, but investment had been positive beforehand, and that's coming because of uncertainty and confidence. And the uncertainty in the UK, driven by the fact that people were expecting a resolution on a certain date, and of course that didn't happen, so the option value of waiting, of holding back, is quite high. Now, if there is a deal tomorrow and before somebody puts it on their iPad, I don't know, but you can ask me if you want. But if there is some resolution of the UK's exit, then you'd expect some of that uncertainty to go away, and that sort of the politics behind that to drive less of the economics. But of course, uncertainty will still continue. And you can generalize that to the world position. I mean, we've got tariffs now 20 percentage points higher between China and the US than we had 2 years ago. We called it trade tensions for a long time, but actually now comes under the definition of trade war, I think, and it's extending into technology restrictions. You even hear talk, and I hope it's just talk, of restrictions in the capital market on listings and the like. And I think it's driving a sentiment, and one hears it anecdotally, but one hears it, that actually this is not just about tariffs. This is about some realignment of the integration of the global economy, or a de-integration of the global economy, and things like global supply chains or whatever will not work in the way they have in the past. And against that sort of uncertainty, you see business confidence go down, you see measures of policy uncertainty go up, investment in the G7 and in major economies go down, and that's driving most of the slowdown. Do I think it will change? Difficult to know. There's a phase one deal between the US and China on the cards at the moment, but there's also a threat hanging over European cars, I think, which will be resolved later in the year, which I think would give a real spin to some of this sentiment. And for the financial sector, economic stress, macroeconomic stress, stresses the financial sector, obviously. But you also see some of the pessimism and concern about where the world is going is maybe also going into safe assets. And that's driving, you see some of that might be driving some of the yield curves down, which makes life more difficult for the financial sector. So I don't know how long these politics will continue in that direction. But I think at the moment I see politics, if you like, dominating economics in the effects we see in the financial stability and macroeconomic stability side.
Thank you. If I can turn to Mrs. Jan Courtin in the sort of political dimension. Populism was a major factor in the run-up to the elections, but I think the European Parliament came through in a rather stronger way, reversing that trend. What can we expect from the Parliament in going forward? We've heard strengthening the euro as one of the considerations. Safe assets have also been brought forward. I think these are all issues that will end up being on your agenda. Maybe also if you can say a few words about the priorities that your Economic and Monetary Affairs Committee in the Parliament will be taking up.
Thank you. Thanks for inviting me to speak to this session, and I'm also glad to bring more gender balance in this panel. As a newly elected MEP, representing well, like two-thirds of my colleagues since last May, I'd be happy to provide for some fresh thoughts on the issue of populism in the EU. I would say that, as you mentioned, maybe the last European election somehow marked a turning point on people's feeling about Europe. Without being naive, maybe we can say there's a wind of change blowing on the European sky. Looking back to the past, Europe, well, the European system, European Union, has never been really popular in people's mind, except in some specific periods, like maybe at the very beginning of its creation, because it was post-Second World War, and Europe meant liberty, peace, hope, or maybe in other periods, like, for example, when the 10 countries of the East and Central Europe joined the EU in 2004, it was a feeling of market economy, prosperity, but on the whole, populism and, let's say, skepticism, nationalism has always been very high and has definitely increased over the years. There are many reasons for that. Somehow the erosion of, some of the key foundation of the 20th century democracy in Europe, like political parties, which are much vague, trade unions, religious community, and industrial jobs for life, have left the society more fragile, and globalization leads to many feelings of growing income inequality, concerns about migrations, and people's hunger in Europe, basically. So if you add to this the spread of disinformation, fake news, terrorist attack in the heart of the European cities, yellow vest in France, then you have the perfect recipe for a European trust crisis. But the last European elections, together with some recent national events like some elections in some member states, show that the tide may be turning against populism somehow. If we look back at the last European election, we had two good surprises, two good outcomes. The first is the high participation, It was the highest since 1994, more than 50% of participation. So it definitely shows that people believe that their vote counts, that voting can change things, and that maybe more people believe that the EU may address their concerns. But it somehow gives a last chance to the co-legislator and to the MEP, saying, okay, you've got a last chance. And the top drivers for that, for voting, were basically economic growth and climate change. The two good surprises that we have to measure given the different member states. But it's maybe the lower score of the populist and nationalist parties. We still gain seats, but less than expected. And another point may be Brexit. If I take the example of France, for example, Brexit at the beginning was a really good example and a very good thing for nationalist parties like the Rassemblement National, which says, look, we have to go for the Frexit in France. But as Brexit negotiation became very complicated, they forget about the idea, and it was the case everywhere else. So somehow it shows the unity as well of Europe. But there is still, of course, a lack of confidence, but it seems that people may want to give, as I said, another chance to Europe. And so it's not, and for the first time, there is a big change as well in the political landscape. So it will not be business as usual. As the results of the European elections, we have, for the first time, a new political landscape, more fragmented. We used to have the two pillars, they are still here. The two largest blocks, the center-right and the center-left. They are set to remain the two biggest, but do not have now the majority. And so the Liberals, Renew, and the Greens are now on the game. And so adding, if you had new people, as I said, 75% of the newly elected people are now members of the European Parliament, and new methods then, because you have to reach other majorities, and so it will require more interaction, between groups political. I think this will be a big change, major shift. But to conclude, I'd say on populism, I think the reverse of populism will be only effective if we manage to deliver. Deliver means two things: act according to people's expectation and explaining on the ground. Rebuilding this fundamental link between citizens, confidence, and representative. It was, if I may recall, during the hearing of Christine Lagarde for the ECB, she said that one of her priorities as well is to listen more to the social society, the young people, and to try to explain her role, so that people, citizens we are representing, gain more confidence.
Okay, thank you. Positive side to Brexit, I noted in your remarks. But,
well, if I may,
yes,
because it's not positive at all, even for us. But
turning to a global European bank,
yeah,
and the perspective that you have, what is it that you would like to see on the agenda to improve financial services for European citizens and help the delivery of expectations?
Yeah, well, I think at the moment Europe is a global leader as regards the promoting sustainable and inclusive growth. But to remain so going forward, I think Europe, I refer to the European Union, needs to strive for more. Because on the one hand, we have a number of, let's say, pending issues that coming from the previous period, completing the banking union, completing the capital markets union, putting in place a number of measures that makes Europe a global hub for sustainable financial innovation, benefiting consumers and businesses across the region. And this is the part of the past which we have to tackle and deal with. But I think going forward, in order to remain a thriving economy, I think the focus should be put on a number of priorities. And let me mention just four. First is digitization. So digital is one of the priorities that would impact, of course, on finance, but also on other areas of the economy. So digital needs no explanation these days, should help provide European citizens with the best price, the most convenient products and services, irrespective of the location within the region. And on the other hand, without digital, you cannot imagine a competitive economy based on dynamic companies, dynamic businesses. Now, two essential ingredients involving both public and private initiatives, and maybe in many occasions in cooperation, are, on the one hand, cybersecurity, because with cybersecurity, digital doesn't work properly to the benefit of the citizen. And on the second point is thinking of putting in place a robust policy framework that would facilitate the rapid adaptation to the structural changes created by digital in many domains. We have heard about employment and many other things. When it comes to finance or other business sectors, you think of incentives that promote the scaling up of successful business models, and now it's not that easy, given some regulations in place. And on the other hand, setting up a regulatory framework that enables the technological adoption and that data-driven innovation, which is key. So this is the first priority, digital. Second one, sustainability. I mean, it's, again, you mentioned it, Jan, at the beginning. The transition towards a sustainable socio-economic model requires fundamental transformation. And for that, in Europe in particular, we need, of course, a solid and fully integrated capital market, which we don't have. And the full burden cannot fall on the back of the banks in order to fill the gap between investment needs and the funding, which is estimated in 180 billion per year, which is quite a figure. And on the other hand, of course, banking has a key role to play, covering part of this gap, but also engaging with the very many stakeholders that in this bank-based economy, which is Europe, are at place, with providers, with clients, with companies, engaging with them in order to align interests and actions towards the fulfillment of our commitments vis-à-vis the SDGs. So I think this is second priority. Third priority, of course, for completion of EMU. And I think you are well briefed on this one, but on top of the banking union, we have the resolution regimes, and maybe Klaus will say a word on this, but we still have a resolution framework that needs harmonization and consistency. We need a regulatory framework that does not permit fragmentation, which is not the case today. And finally, I'm now thinking global. Clients the world over ask more and more for the same type of products. They have similar needs, they demand similar solutions, but still we don't have sufficient coordination to provide this kind of alignment. It's difficult to do arbitrage in that respect. So coordinating at the global level, setting a common standards, I think is key. And the implication of this is very important when it comes to the mindset of regulators and authorities, because the mindset remains too local and too sector-based and too, in many occasions, entity-based within a sector. When it comes to think of cybersecurity, I mean, this is not in the mandate of a single institution, and many say this is not even mandate. For instance, in finance, is the data protection authorities or the police or who knows whom. Data management and protection, climate change. So these are, I think, cross-cutting mandates and problems that require some change in the mindset of regulators in order to coordinate more among them.
Thank you. Coming back to sort of Europe as a project, European Union as a project, Mr. Regling as an institution who faces investors on a daily basis, investors that have choice, global choice. How do you find the European Union as a project is a proposition? Is it difficult to sell?
That's a challenge, because Europe is complicated. It's a unique project, and many Europeans don't understand it because it's so complicated. So when I talk to investors from outside Europe, it's obviously even more complicated. But one has to do it. It's not hopeless, particularly now that we have made significant progress the last 10 years. But I can tell you when I set up the ESM 9 years ago, and started talking to investors. We are now dealing with about 1,500, the largest investors worldwide. There were very clear, distinctive groups. The Anglo-Saxons, to put it bluntly and a bit simplified, thought in 2011-12 that the euro would disappear. So they didn't want to buy my bonds. Why would they buy euro bonds if they think the euro disappears? So I had to spend a lot of time in Asia, where the view, the perception of Europe was very different. And this goes back to several points. In Asia, basically people believe that governments can fix problems. I think in this country, not many people believe that problems are fixed inside the Beltway. It's a fundamental difference. So they believed that we would be able to fix it. They bought our bonds. The first 2-3 years I sold 40% of ESM, EFSF bonds to Asian investors. But it's still a challenge because we are so complicated. The 28 countries, member states of the European Union, maybe very soon 27, it's not the United States of Europe, obviously. If they were, my job would be a lot easier. But they're also not just 27 sovereign countries like you find in other continents. They have pooled some sovereignty. They have agreed on many rules, how to coordinate things. And the countries that use the euro, so a subset of the EU, 19 countries use the euro, they have pooled even more. They have a common exchange rate and monetary policy. And to make that a success, they also had to do many other things. Some of those things had been forgotten in the initial setup of monetary union, but a lot has happened the last 10 years. We have new institutions like the ESM, but also banking union with the resolution funds, a single supervisor. This is significant progress. And the international investors look at that. And when I travel around today, talking to them, they ask questions about what else are you doing to make monetary union more robust, because they want to use the euro more. I have no problems today selling ESM bonds. International investors are looking to Europe because the alternatives are often not so attractive. But they ask what else will happen. They are interested. And I think, therefore, I fully agree with what Jean said earlier. This is the right moment to think about strengthening the international role of the euro, something that we didn't really try actively in the past. We were busy building up the internal processes and mechanisms. But I think today, particularly in a world where the United States is moving away from multilateralism, Europeans believe in multilateralism more than anybody else. And we know that it can work, although it's hard work sometimes, but it can work. I think the euro has a great future. The euro today is much stronger than it was 10 years ago because of all the things we have done. We know a few more things need to be done, like completing the banking union, also with the common deposit insurance. We will provide a backstop to the single resolution fund. These are details, but they are important. We need the capital markets union in order to get rid of the fragmentation of capital markets. And all these reform steps will also, again, make the euro more interesting for international investors. And I think there are now the numbers coming out from the IMF and BIS that show that indeed the relative importance of the euro in the international monetary system, banking system is growing. During the crisis, it decreased, but now it's growing. The US dollar is coming down a bit. Still, by far, it's the top. But I think we see here the first signs of moving towards a more balanced, multipolar monetary system. It will take a long time. This doesn't happen overnight. What Jean mentioned, the ECB has to be more prepared to do swap lines. The Fed may not be able to do it as much in the next crisis as it did in the last crisis. So there are many elements. But I see the appetite among international investors. They would appreciate if we move in that direction. And I see the debate inside Europe on this topic is becoming more intense. That's good. It didn't happen before. So I'm very optimistic on that. And the last comment, I think you heard that the people here are all a bit more optimistic on Europe than you were in your introduction, which sounded quite gloomy. And I think I don't share that. We have done many things. And when I look at the IMF forecast for Europe, we are not in a crisis. We have a slowdown in growth. But most countries are growing at potential, a few exceptions, including Germany and Italy. But most other countries are not doing so badly. The support for the euro, you talked about support for the EU, which is always a bit lower, but for the euro, it's at an all-time high, at 76% of the population in those countries that use the euro, so 19 countries, they are happy with the euro. This is higher than ever since the creation. So I think this provides a good basis to move forward.
Thank you very much. I was I was surfing on the political noises around European, and I stand corrected with an economic perspective that it's not all bad. We're running, we started a little bit late, but the clock is ticking on us. I just wanted to come to the second element in our panel title, Brexit. A deal was arrived at the political level yesterday, but it still needs to be ratified by 2 sets of parliaments. If I can turn to you, Madame Jan Courtin, for the European Parliament, is there already a sense or a vibe of how the European Parliament will receive this deal?
Well, as you said, yesterday, the EU leaders endorsed this new Brexit withdrawal agreement, and now all the attention is in London, where you mentioned that Parliament will vote on this deal tomorrow. Should the Brexit then Parliament approve the deal, we'll be voting next, maybe Thursday, next week in Strasbourg on it. It's now for the British Parliament to decide. If this is approved, this lays the foundation for a new relationship, basically, between UK and the EU. And turning to what I say about Brexit and the good thing, we deeply regret this decision, but it's a will of the British citizen, and we have to respect that. I mean, we are members of the European Parliament representing citizens, so I mean, we have to respect it's a democratic process. So let's see how it goes. Maybe you can invite us tomorrow evening just to discuss the next thing, because tomorrow will, be a crucial step, and next week as well will be so.
I think we can talk all night about the different nuances that may arrive with finalizing or the next step in the Brexit. That's not the intention. I picked up earlier today on the subject of Brexit that it's not the beginning of the end, the deal that has been found, but it's the end of the beginning. There's a whole new chapter, phase to come. If I could just get a sense from you, Mr. Cunliffe, relations going forward, and anything that you may have picked up on the latest gossip
I haven't looked at my phone for 10 minutes, so people in the audience will have a better idea than me. I think the vote looks as if it'll be very close. We'll know on Sunday what happened on Saturday. I think, no, I'm sure of this. I think going forward, this just settles a very important question, the terms of the UK's divorce from the EU. It would lead to as constructed at the moment, a period of until December 2020, while the next phase is worked out, which is the UK's longer-term economic, it's broader than economic relationship with the European Union. That's a relatively short time, but what that will look like, I think, will then be the subject of the next phase of negotiations. If there is no deal, which is still a possibility, then I think the work, in the end, if the UK leaves the European Union, there will have to be a new relationship, but the nature of that relationship will depend in part on how we get there, and the nature of the exit, I think, will condition the next few months. Where we go after that, and where we go in areas around financial services and the like, I think we'll have to see. We have a good relationship with our European counterparts. On a technical level, I'm not sure there are that many issues, and we operate a fairly open financial sector in the UK, with Swiss and US and other third countries. I think that the nature of the relationship will be much more decided by the politicians than by the technicians, and the politics, I think, are an entirely different thing, and will remain to be seen. But the next year, after a deal, if there is a deal, well, actually, if there is a deal or if there isn't, the next year, I think, will also be sort of quite full of Brexit news as this relationship is worked out, and it's quite a short time to do it. Though, of course, the period can be extended.
Mr. Pisani-Ferry, any impartial
Yes.
views?
Well, let's assume there is exit with deal. The question becomes what comes next. And I think we are going to realize that so much of the diplomatic, technical, political energy has been devoted to the question of the Irish border and so little to the future relationship. And to me, the question will be, how far can we diverge in regulatory terms? There is bound to be regulatory divergence because we have exactly the same regulatory system in a number of fields. So I suppose if Britain leaves, it's not to keep exactly the same system. Now, some divergence is inevitable. Now, at which stage would we say that divergence becomes problematic and endangers the quality and the intensity of the economic relationship with the UK? That's a problem we've got to solve now. And I don't think we devoted a lot of thoughts to this problem.
Okay, thank you. Mr. González-Paramor, just very quickly, a few comments. You mentioned 4 priorities from the banking view on Europe going forward. Of the 4, which is the most important one? Sustainability or?
To me, clearly, sustainability is outstanding, and many things have to be mentioned recently, including the signing of the principles of responsible banking in United Nations a few weeks ago. 1/3 of the capital of the banks in the world was represented in that meeting, which I think means a lot in terms of commitment. And progress in Europe, again, I think is leading the pack. We have now a lot of work advanced on the taxonomy of green vis-a-vis brown. Now it remains to, and it was an agreement between the European Parliament and the Commission. Now let's see how flexible can it develop going forward in order not to kill brown activities that can become green with finance, and this requires some flexibility. And also on standards of transparency. There are proposals there. But now, again, let these standards to be sector-based, scientifically based, and also flexible. And let's guarantee that transitions are smooth in order, again, not to kill activities that have possibly a sustainable future if financed according to some milestones. But you could not believe how much can be done using the combination of digital and green and sustainable. Now you can identify the preferences of clients as regards sustainable investments using data and analytics. So there are people coming to you and say, look, I am very green. What do you have for me? And you can design a tailor-made thing. Or advising companies to become greener and transform themselves and so on and so forth. So in that sense, I think sustainability should stand out at this very moment without, of course, forgetting about the other 3 priorities that I mentioned.
Mr. Reckling, I turn to you as the last contribution. In your earlier comments, you remarked on strengthening the international role of the euro, that the banking union would be completed, capital markets. And I had a question from the audience, which you have implicitly answered, but there's one element that is missing, and it might be possible to give a very short answer to this around the creation of capital markets and a Eurobond creation. What time frame do you think is feasible?
So on the question of safe assets and Eurobonds, one cannot have a short answer. I would be happy to talk about that for half an hour. But it's
ESM bonds are safe, right?
The bonds that are issued by the ESM are safe bonds. And of course, AAA and AA plus rated countries issue bonds. But the problem is that the volume of those safe assets is shrinking in Europe. And the volume has been pretty small anyway compared to the US Treasury market. And it's one element among several others that will ultimately determine whether we make progress of strengthening the international role of the euro. That's why it's a very important issue. It's not something that will be resolved the next 2 or 3 years. It will take longer because it will involve ultimately mutualization of some public debt. That requires trust among the member states, which got lost during the crisis, but it can be rebuilt. And I think we are starting to do that. The fiscal situation of all member states of the monetary union today is better than 7, 8, 6 years ago. But we need to continue on that. And it's encouraging that a debate has started, because the word safe asset, Eurobonds, was a taboo in some countries, including in my own country, in Germany, but also in several others. But now the debate has started, and people begin to understand that how important this concept is for the good functioning of monetary union, for a stronger international role of the euro, and that it's therefore worth thinking about it and moving in that direction, even if it takes a decade or two.
With that, I think we can conclude that the European project continues. Different time speeds, but there are plenty of work streams in it, and we look forward to continuing our relationship with the United Kingdom, no matter how we read about on Sunday what happened on Saturday. But with that, I would like to thank my panelists for their contributions and close this session for today.
Thank you.
Thank you.
Thank you.